any semblance of fiscal sanity that existed in America now seems to be gone. And it's a bipartisan loss of fiscal sanity. There's no question that if this happens, American standard of living will be lower than otherwise.
Markets are posting consecutive weekly gains as optimism builds around a China-U.S. deal. Trade talks are currently happening right now in London. Meanwhile, rising bond yields and heightened concerns at home and abroad are making investors nervous. The World Bank is projecting that the economy in the U.S. may slow down by half. And we'll comment on whether or not this is going to be true and the future of the economy with our next guest, Donald Boudreaux. He is the professor of economics at George Mason University and the Getchell chair at the Mercatus Center. He's also here to discuss his new book, co-authored with Phil Graham, called The Triumph of Economic Freedom. Professor Boudreaux, it's an honor to host you. Thank you for being here.
Thank you for having me.
Let's just start with recent news. The World Bank is projecting that tariffs are going to cut American economic growth by half. Let me just pull up this article here so you can see it for the audience here. Before we do that, why don't you comment on whether or not tariffs actually have a significant impact on economic growth at all, before we comment on the World Bank's projection of having the GDP growth rate?
Well, it depends what you mean by significant. The United States, of course, and the North American economy, these are giant economies, and trade is not the largest part of these economies. So it's not going to, Trump's tariffs are not going to cause the United States to return to, 1960s level standards of living. But because we are dependent on trade, roughly about, I would say, 20% of our economy, the tariffs are going to have a noticeable impact on American GDP growth, on U.S. standards of living going forward. The tariffs will unambiguously make us Americans poorer and our economy grow more slowly than we would experience in the absence of those tariffs.
This is the forecast of the World Bank. It expects the world's largest economy, the U.S., to grow by just 1.4% in 2025, a sharp deceleration from the 2.88% expansion recorded in 2024. In its January report on the outlook for the global economy, the World Bank forecast a 2.3% increase in U.S. GDP. With the rise in duties hurting exports in the U.S., the World Bank also lowered its forecast for economic growth in the Eurozone, Japan, India, and many other countries around the globe. This is according to the Wall Street Journal and other members of the press just earlier today on the 10th of June. How would you respond to that forecast?
I think it's very credible. The OECD also made a similar downgrade in its forecast of economic growth. The economy over the past 50 years has become increasingly globalized, and so we call them supply chains. I prefer to call them supply webs. The connections of producers in all countries are incredibly complex, with supply sources from all over the world. And Trump's tariffs are severing or obstructing these supply sources. That cannot help but reduce economic growth, as I said a moment ago. And, we can, reasonable people can debate the particular predictions, 1.4% versus 1.7%, 1.3%. I wouldn't bet on any particular number, but I'm quite confident that the rate of economic growth of the U.S. economy and of the global economy will be slowed by Trump's tariffs. No question.
So it's not fear-mongering by the World Bank, you think?
Not at all. Not at all.
Well, you have a legal background as well, Professor. Tell us about whether or not Trump has the legal authority to implement tariffs however he likes. As you know, there's been a lawsuit against the Trump administration. A federal appeals court temporarily reinstated the most sweeping of Trump's tariffs on Thursday last week, a week and a half ago, after a day after the U.S. Trade Court ruled that Trump had exceeded his authority in imposing duties and ordered an immediate block on them. So tariffs are allowed for now. This is the latest development from this lawsuit from the U.S. Trade Court. Generally speaking, though, should the court be allowed to intervene in presidential affairs?
Of course. Of course, the president does not have plenary power to do whatever the president wishes. In this particular case, the U.S. Constitution is quite clear, unambiguously so, that the power to levy duties, as it says, tariffs, resides exclusively with Congress. Now, Congress has delegated some of that power under certain conditions in various statutes to the executive branch. And each of those delegations of power comes along with conditions. Trump, in my view, has unquestionably exceeded those conditions. He's unquestionably made a mockery of the delegation of power. How the courts will actually rule is anyone's guess. I mean, courts can, in my view, can rule. They do often rule mistakenly. I think, according to the clear language of the U.S. Constitution, according to the clear language of the enabling statutes that give the president the delegated authority to impose tariffs, what Trump is doing, particularly with his April 2nd Liberation Day tariffs, these cannot be justified by the statute under which the president imposed those tariffs. I'm hopeful, and I predict that the appeals courts, if it goes to the Supreme Court, even that court, will strike down that extensive use of delegated authority as indeed being not really delegated to the president by Congress.
But Trump implemented tariffs in his first term. What's different this time?
Well, first of all, the Liberation Day tariffs are implemented under a completely different statute that Trump did not use to implement his tariffs during the first term. Trump's tariffs in the first term were mostly implemented for national security purposes and for countervailing duty purposes. The statute that he used for his most extensive and egregious extension of the tariffs, the April 2nd Liberation Day tariffs, these were implemented under a 1977 statute that grants the president power to allegedly protect Americans from foreign goods and services, foreign exchanges, foreign commercial transactions under very limited circumstances. And those circumstances, I think, do not prevail. First of all, the president has to declare an emergency. The emergency that President Trump used to justify under the statute that he claimed the power, the emergency that he declared were U.S. trade deficits. Well, the United States has been running trade deficits since literally my senior year of high school. And 2 years ago, I turned 65, the original, the official retirement date. My entire adult lifetime, the U.S. has been running annual trade deficits. These are not an emergency. Trade deficits are misunderstood by most people. Trade deficits are an inflow of capital into the country. This is not an emergency. It's a blessing, in my view, for America. Anyway, the president vastly exceeded his authority he latched onto something, these trade deficits, to claim they are an emergency. There's no economic basis or legal basis, really, for asserting that these trade deficits are an emergency. I believe that that's the basis upon which those Liberation Day tariffs will eventually be found to be unconstitutional, or at least in violation of the statute that President Trump used to impose them.
Okay, well, in both situations, both cases in 2017 and 2018 and now, justifications were used as to why tariffs were implemented. One of the more common justifications was that China has stolen jobs from Americans. And so this is a protectionist measure. Trump wants to protect American jobs and the labor force long term. He even said earlier this year that there may be some pain for the economy now, but this is needed for economic prosperity in the long term. Do you agree with this assessment that Chinese stole the Americans' jobs?
No. No. This claim is bandied about constantly. You cannot find any evidence for it in the data. If you look at the data, the U.S. unemployment rate is very low, and it's been, putting aside the COVID years, it's been very low. It's averaged about 4.2% for the past 10 years if you eliminate the COVID era, which of course had nothing to do with China. Well, it had nothing to do with trade with China. It might have something to do with a lab in China. So unemployment is low. There simply is no loss of jobs that we can point to. If you look at industry, America's industrial capacity today is at an all-time high. Manufacturing output is near an all-time high. Real wages for production and non-supervisory workers, these are, factory floor workers, blue-collar workers, not hedge fund managers or bankers or CEOs. These wages are at an all-time high. American exports are near an all-time high. There's just nothing in the data to support this claim, although people keep making it repeatedly.
Well, what about the notion that manufacturing has shifted offshore over the last 30 years?
If that were true, then we'd find it in the data. We'd find that American manufacturing output has fallen. Manufacturing output in America is near an all-time high. Industrial output is at an all-time high. Industrial output is a little bit more, it includes manufacturing, but it's broader than manufacturing. Wages would have fallen. What has happened in the United States, and this is happening worldwide, is that the share of the workforce in manufacturing as a share of the total workforce has been falling. But that's been falling since 1954, pretty steadily. In 1954, it was close to 30%, I believe. Today, it's about 8%. But if you look at that trend from perspective of your viewers, that trend has been steadily downward. And it hasn't accelerated when the United States began to run trade deficits. It hasn't accelerated when NAFTA was implemented in 1994. It didn't accelerate when China joined the WTO in 2001. Indeed, if anything, for the past 15 years, the rate at which manufacturing workers as a share of the total workforce has fallen has slowed a bit. So there's just no basis to that claim. And as I said, this trend is worldwide. It's happening now even in China. It's caused by mechanization. America's loss of manufacturing jobs as a share of the total is not caused by trade. It's caused by mechanization. It's caused by the very same forces that worldwide and in North America caused the portion of the workforce in agriculture to decline. 200 years ago, you had about 80% of the workforce in the United States working on farms. Today, you have about 1%. And that had nothing to do with trade very much. It had mostly to do, almost exclusively to do, with the mechanization of farms. And that's what's happening in agriculture. I think that's a good thing, but whether you think it's a good thing or a bad thing, it's not caused by trade, it's caused by innovation. There are estimates, there are attempts to actually pin down the precise number. I think the best estimate that I saw is that the loss of manufacturing jobs as a share of the total is about 80% is caused by innovation. Maybe 20% can be directly related to trade, but certainly at least 4/5 of that decline is due to mechanization and technology.
Well, I think it's clear that Trump wants manufacturing brought back home from other countries. Whether or not overall manufacturing in the U.S. has increased over time, like you said, he wants all manufacturing, if not most of it, to be done in the U.S. For example, he wants tech companies to start manufacturing here domestically. He said on the 23rd of May on Truth Social, "I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the U.S. to be manufactured and built in the U.S., not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S." He made similar threats to other tech companies as well. What happens if he passes a law that says you must manufacture in the U.S. or we're going to slap a 25% tariff on you to any company?
Well, first of all, the products that those companies sell in America are going to go up in price. And so Americans will be able to afford fewer of them. We'll replace our iPhones much less frequently than we currently do. And so the quality is going to fall to the extent that, first of all, I don't think it appalls me that a politician seems to be ordering a private business how to conduct its affairs. But put that aside, that's a normative issue. On the economics of the case, to the extent that Apple does produce more of its iPhones in the United States, as I said, it will become more expensive. The reason Apple produces them now where it does is because it can assemble those iPhones more cheaply abroad than it can in the US. And so when it returns to the US, those iPhones are going to become more expensive. The resources that are moved into those US-based factories that assemble those iPhones will have to come from somewhere. And so output in other US industries will fall. We don't know which ones, but we can be sure, because those resources have to come from somewhere, that output elsewhere in the US economy will decline. And as the output elsewhere in the US economy declines, the prices of those outputs are going to rise. There's no question that if this happens, American standard of living will be lower than otherwise, because the wages that Americans earn, that the prices of the goods that we will have to pay to acquire are going to be higher as a consequence.
one can make the counter argument that American businesses would have to be, I guess, novel in their manufacturing process, come up with some other methods of production that may lower the overall fixed cost, maybe produce more with robots or on an assembly line that doesn't require high wage workers. I don't know. I'm just
that's true, but surely these companies have an incentive to do that already, and if they manage to do, and so that we don't need a U.S. president or the U.S. government giving companies the incentive to become more efficient. They already have that incentive. If to the extent that manufacturing is reshored, as we say, in America because of the tariffs, that production will unquestionably be less efficient than it currently is.
Well, Professor, is there a historical precedent for a president and or Congress issuing an order for American companies to reshore manufacturing? And if so, what happened?
Not many. I mean, the U.S. government for many times in the past, of course, has raised tariffs in the hope of generating more output for the protected industries. During wartime, of course, World War II, the Korean War, presidents have tried to bully companies into doing this and that, using carrots and sticks. This peacetime order, seemingly an order, peacetime threat by a sitting U.S. president to a private company that's doing nothing wrong, yes, that's a bit unprecedented.
Okay, so tariffs are an economic incentive for companies to produce in the U.S. or manufacture in the U.S., but can they legally issue a law forbidding companies to manufacture abroad?
They can probably use some excuse under a national security provision in various statutes. It's a legal question how broad that would be. I don't think it's the case that the president can simply say, look, for economic reasons, I don't want you producing abroad, so don't do it. That is not allowable under American law. They will have to find some colorable excuse under a clause using national security. But it would be highly, highly unbelievable for a president to say, look, just all manufacturing generally has to return to the U.S. because of national security. That would be completely unprecedented. I doubt that would fly in the courts. It would be economically ridiculous, too.
Let's turn the page now to, pun intended, to a new book that you recently released, The Triumph of Economic Freedom, Debunking the Seven Great Myths of American Capitalism. You co-authored with Phil Graham. Let's just jump right into one of the great myths of American capitalism that you debunked. Can you give us a teaser?
Oh, well, so we were talking about one of our chapters, chapter 4, is on the myth of the so-called hollowing out of America's industrial economy since the mid-1970s. It simply hasn't happened. And we have in that book the facts and the argument to back up our claim that is, in fact, a myth, that the U.S. economy has been hollowed out. One of the other chapters, perhaps my favorite of the book, certainly one of my favorites, is chapter 3. It's on the myth of the Great Depression. The common claim is that the Great Depression, which began in 1929 and ended much later, was caused by a fundamental flaw of capitalism, greed, speculation, underconsumption, and it took the New Deal led by Franklin Roosevelt to save America from the Great Depression. That's a myth. The Great Depression wasn't caused by a failure of capitalism. It was caused by two things. To summarize, it was caused first by a failure of the Federal Reserve to do its job. The Federal Reserve was created in 1913 to serve as a lender of last resort when cash reserves in banks went low, and the Federal Reserve in 1929 failed to do that. They allowed the money supply in the U.S. to contract by 30% from 1930 through 1933. Milton Friedman and Anna Schwartz called that the Great Contraction. There's no doubt that was a major source of the dramatic downturn of the American economy in the early 1930s, with unemployment reaching 25%. And then the length of the Great Depression, the unemployment remained in double digits throughout the entire 1930s. So Franklin Roosevelt came into office in March of 1933, and his policies, some of them did some good in terms of relief But in terms of recovery from the Great Depression, there's very little evidence that the New Deal contributed very much. And there's a lot of evidence that the New Deal probably extended the Great Depression by creating an atmosphere of uncertainty, by pursuing, you had the Smoot-Hawley tariff under President Hoover that also contracted trade. In my view, this is from work that I have read by the economic historian Robert Higgs. In my view, the Great Depression probably didn't end until after World War II. Now, World War II reduced unemployment because you conscripted a lot of young men into the army. But it wasn't until after World War II that we see signs in the private economy of investment returning to where it was prior to the Great Depression, of consumer confidence, business confidence returning to where it was. And that's because by the end of World War II, the New Deal had pretty much gone by the wayside, the more radical elements of it, and business people and investors were finally getting back into the game as things returned to normal after demilitarization in 1946 and 1947.
What is the relationship between taxes and economic growth that you've observed?
Well, taxes are pretty simple. The more you tax some,
yeah, this is a debate between the left and the right.
Yeah, you get less of it. Now, there's an empirical question: how much of it do you get less of? Governments obviously need to get resources from somewhere, and so taxes are the main avenue through which government gets their resources. There are better ways to tax, and there are worse ways to tax. Broad-based, low marginal rate taxes are, in my view, the best way for the government to get resources. Having high rates that are very discretionary and that target particular activities, that comes, in my estimation, too close to economic engineering. And the closer we get to economic engineering, the closer we get to the government picking or trying to pick winners and losers. And in my view, that's very bad for the economy. It creates much more uncertainty than you have in a stable situation where the government is getting its revenue by identifying a broad tax base, applying a broad set of tax impositions at hopefully relatively low rates. So, yeah, go ahead.
Is there a relationship between the deficit level and long-term economic growth? And I'll link this to what's currently going on between Elon Musk and Doge in the White House. So this is, as you may know, Musk left the Doge program. He tweeted on June 3rd, "I'm sorry, I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination." He later retweeted, "It will massively increase the already gigantic budget deficit to $2.5 trillion and burden American citizens with crushingly unsustainable debt." Okay, so let's just comment on the two-part question, whether or not you agree with this ballooning to $2.5 trillion in deficit. And the second part, he makes a statement that it will burden American citizens. Will American citizens actually feel the brunt of whatever ballooning the deficit is going to experience?
Yes, the debt has to be repaid. And so the people who will repay that debt are future taxpayers when the debt comes due and when the debt service comes due. That's unavoidable. And Americans in the future will repay that debt either by paying higher explicit taxes in the future, by having fewer government services delivered to them in the future, or, much more worrisome, having the debt monetized, having the Federal Reserve come in printing money in order to help the government pay the debt. Each of these ways will be a burden on the future Americans who are paying taxes, who are earning incomes when those taxes come due. There's no way around that other than default, in which case you would burden the entire burden would fall on the debt holders, many of whom would be Americans, by the way. So I think Musk is entirely correct to be concerned about the size of the deficit. Any semblance of fiscal sanity that existed in America now seems to be gone. And it's a bipartisan loss of fiscal sanity. The Democrats are no more interested in fiscal rectitude than the Republicans are. They're both spending other people's money, future taxpayers' money, as if they're drunken sailors. And it is dangerous. And at some point, the debt can grow too high. There's evidence, cross-country evidence, that as debt rises to a certain level, proportion to GDP, those countries begin to suffer. I see no reason to believe that the United States is immune to that.
I'm going to ask you specifically how we're going to suffer. Before that, what have I told you, Professor, that I've noticed let me just pull this up. This is a chart of the federal surplus or deficit, in this case deficit, published by the St. Louis Fed. If you overlay this with the S&P 500, there's a rough inverse correlation, not perfect, but rough, meaning whenever the deficit seems to spike, we have a rise in stock market valuations shortly thereafter. Not a perfect leading indicator. There's a rough correlation. It kind of makes sense. With more liquidity, there's better equities valuations and performance. Now, what if I told you that when you have more deficits, we will have better stock markets and market performance? The wealth effect kicks in. The wealthy spend more money, and that drives the economy forward. Would you disagree with that statement?
Well, I mean, if the data say what the data say. I mean, first of all, I think a better set of data would not be just the one you show, although that's fine. It would be a federal deficit or surplus as a share of GDP, and then I would wonder what the relationship is then. It would probably still be, David, as you say, it probably would still be something like this inverse correlation. But as you know, correlation is not causation. So it could very well, I don't have a firm answer to your question. I haven't studied it, but it could very well be that as America becomes wealthier, then it can afford to take on more debt, just like a household can afford to take on more debt. And so I would be hesitant to say that in fact, I'm quite confident that the rising debt, federal debt, is not a cause of the rising stock market valuations.
All right. So going back to your statement about how people would suffer as a result of rising deficits, exactly how? How would our lives change if the deficit blows out of proportion?
Well, what I said a moment ago is the first point I would return to, and that is the taxes in the future are going to be higher. So that's going to depress living standards in the future as the debt comes due and the future taxpayers have to repay it. But if at some point, we Americans have been lucky because we are a gigantic economy. We're still largely a free economy. And so people have been willing to hold our debt at largely low interest rates. But if the debt becomes too large and if global investors become spooked by saying, wait a minute, the U.S. government might not repay, or they might delay repayments, then those interest rates will spike. As those interest rates spike, then the United States government finds it then increasingly difficult to borrow money. More worrisome is that private Americans, particularly private American businesses, will find it more worrisome to borrow money. And when that happens, business activity will compress dramatically. There's the old line about I forget the exact wording, David, but there's a old line about bankruptcy. At first comes you move toward bankruptcy or a financial crisis slowly, and then all at once. And no one can say for sure just when a crisis would happen. But at some point, you cannot continue to run up debt without assets behind it to support it, without expecting some negative consequences in the future. When they will be, I don't know. But I do know that it's impossible to continue down this road unconstrained as we're doing.
Is there a direct relationship between the deficit level and inflation?
I think the deficit level, yes. It's not one-to-one, but as the deficit rises, the prospects of the monetary authority in the U.S., of course, the Fed, monetizing that debt rises. And as the Fed injects more money into the economy, that creates more inflation. And so, yes, I do think there is a loose but positive correlation between the size of the budget deficit and the prospects of inflation.
Your book, I believe, argued that 2008, the financial crisis of 2008 was a result partly from government housing policies, not just deregulation. Can you expand on that?
Yeah, so starting in the early 1990s and accelerating through the 1990s, The U.S. government decided that i- increasing the home ownership of families who in the past would not have been eligible for mortgages is a good thing. You looked at, okay, people who own homes, they're more financially stable, uh, which is a good thing, and that's true. And so through various mechanisms, the not least being the government's influence over Fannie Mae and Freddie Mac, nominally private institutions, but they were created by the government to buy mortgage-backed securities and buy mortgages. The government increasingly required that the percentage of I forget the exact term, well, basically subprime mortgages that these institutions hold steadily increase. So Fannie and Freddie are now buying more and more subprime mortgages throughout the 90s and early 2000s. They can't be sustained. As Fannie and Freddie are buying these things, of course, the mortgage generators, the banks generating these things, they're eager to to make the mortgages. Okay, I got this big gigantic agency or agencies, Fannie and Freddie, willing to buy these mortgages. So I'm the local bank. I'm happy to extend the mortgage to this person who didn't put 20% down, put nothing down, or only 5% down, doesn't have the economic qualifications that the mortgage borrowers in the past would have had to have, but I don't care. I'm going to make this loan to this mortgage holder, and I'm going to sell the mortgage to Fannie and Freddie, and I'll be made whole for it. And so Fannie and Freddie are left holding the bag. And then when you extend credit, as happened to people who were not as good credit risks as historically has been the case, then when you suffer a little bit of an economic downturn, of course, those people find themselves unable to pay their mortgages. They're underwater in their homes, and that's what happened. The housing market collapsed, and Fannie and Freddie and other mortgage holders experienced uh, financial difficulties. The U.S. government had to bail them out. Those losses were socialized. It wasn't a result of deregulation. It actually was much less deregulation than people suppose, leading up to the subprime crisis of 2008.
What lessons, if any, have institutions and the government learned following this crisis? And whether or not my broader question is whether or not we're going to face a similar situation today.
I fear that we have not learned the lessons appropriately. I look around and I see uh, the institutional willingness to extend credit to people who haven't yet earned the right to have that amount of credit extended to them. The government's uh, 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 displayed eagerness, or at least willingness, to bail out financial institutions for having made imprudent decisions will only further encourage in the future financial institutions of similar size to make equally imprudent moves. And when you make an imprudent move, eventually the chickens come home to roost. And when those chickens come home to roost, they have to be taken care of, and the government's going to bail them out again. I think the risk of that is quite high. I think lessons have not been learned.
Anything that can be done to mitigate these risks that you said were quite high?
Well, the government can, yes, something can be done. Whether something can politically be done is a separate question. What can be done actually is the government can say, look, until now, we have been backing you either explicitly or implicitly with promises of bailouts in case you get in trouble, too big to fail. We're not going to do that now. You're not too big to fail. There's no such thing as too big to fail. If you fail, it's on you. If that statement were made, and if it were believed, and that's an important part, it has to be believed, it has to be a credible claim, then the financial institutions, the banks, would immediately become more prudent than they currently are. Whether or not it's too late now is a separate question, but they would certainly improve their prudence, and hopefully it would not be too late. But I don't see the government making that kind of credible statement. The government's, of course, financial crises, because the financial crises make life really, really difficult for the persons currently in office. It really dramatically reduces their prospects of reelection. And so their incentive is to solve the problem now, throw cash at the problem now, and then we'll deal with the long run consequences later. The problem is when you throw cash at the problem now, you might make things appear to be better now, but then you make things in the future worse because you're creating even worse incentives.
Well, let's finally turn the page to what you think is going to happen to the future. Well, first of all, there's a lot of uncertainty right now amongst people in the labor force. People are unsure how these tariffs and this trade war may evolve, and younger people in particular are a little concerned about their career prospects. What would you say to a graduate student or a college student just about to graduate this year, entering the workforce? Any career advice you would give amidst this period of uncertainty?
Well, look, I'm not predicting calamity, and the trade war hopefully might be tamped down. I don't think it's going to go away because Trump really does like tariffs, but unemployment is still pretty low. I think economic growth is going to slow, but there'll still be jobs, and so major if you're a student, major in some field that has some reliable prospect of landing you gainful employment when you graduate. One of the beautiful things about how rich we are is that we can afford a lot of folly, and some of it's fine. So when you're really rich, you can major in a rich society, you can major in something that has few job prospects. I don't know, major in, 17th century French sonnets. Well, okay, that's fine, but understand that that's a consumption good for you. Yet that no one's going to employ you to pontificate about 17th century French sonnets. There are majors that are more practical, accounting, nursing, finance, and there's nothing wrong with getting a college degree. And it doesn't have to be a college degree, by the way. I do agree. I disagree with a lot of my fellow MAGA Americans on lots of things, but I do agree that there has been an unnecessary, not sure what the right word is, an unnecessary degradation of or contempt for blue collar jobs. There's nothing wrong with blue collar jobs. They're the right jobs for lots of people, and many of them pay very well. Don't feel you need to go to college just because your cousins go to college. If your calling is to be an HVAC technician or an auto mechanic or work in a construction trade, then do it. I mean, there are some good jobs in that. There's no. I think a mistake has been made in the United States over the past several decades to artificially attract people into college when those people actually should have not been in college. They should have pursued honest, good trades outside of the college classroom. And I say that this is against my interest. I'm a college professor. I should have as many people come to college as possible. But I don't think that's good policy.
Well, okay. So with the advent of AI, which sectors do you think will still, have stability for jobs for graduates in the future? Which sectors are at risk?
Well, I mean, obviously, things you do with your hand, those are things that AI is going to be less likely to touch and affect in a negative way. AI might touch them in a positive way by helping make instruction in those things better. I'm not a prognosticator, David. I can't know exactly which particular industries or which particular professions are going to thrive and which particular ones are going to suffer under AI.
Well, just at the university that you're teaching in, Professor, that there's been a shift in interest amongst the general student population for different courses or electives or subject matters or majors over the last decade or so.
Well, so AI, of course, is only really it's only 2 or 3. It's commercial applications, only 2 or 3 years old now. I can't say I've noticed at my university, George Mason University, any change in consumer interest, student interest. Perhaps if we talk 2 or 3 years from now, I'll give a different answer to that. But so far, I haven't noticed it. I'm not saying it hasn't occurred. It's just if it has occurred, it's not large enough yet to have captured my attention.
I understand. Finally, just like you get your thoughts on the feud between Harvard and the Trump administration. Certainly, you've been following what's going on there. Just brief recap: the Trump administration has filed to block Harvard from recruiting or accepting international students, and then that's like 30% of the student body. Of course, Harvard countersued or sued, filed a lawsuit against the Trump administration for that. Anyway, what is your thought on that saga?
So, look, I think a lot of what goes on in higher education is nonsense. A lot of it's government funded nonsense. And if you are taking money from the government, then as a university, then you have to be willing to accept whatever constraints the government imposes on your accepting money. Harvard gets a lot of money from the U.S. government. I personally may disagree with some of the new constraints that the Trump administration is putting on that money, but it's hard for me to say, well, if the government is giving the money, then the recipient of the money has no, excuse me, the giver of the money, the federal government, has no right to determine or put limits on how that money is used. But let me, it does trouble me greatly that the Trump administration is targeting one university in this saga. I think that is if if it's not illegal, and I don't know the details enough to say whether or not it is, but it does trouble me greatly that this seems to be a vendetta by the Trump administration against one of the world's leading educational institutions located in Massachusetts. I think that's it's not just bad PR. It is probably bad policy to be that targeted.
One of the arguments is that Harvard accepts a lot of Chinese students who later go back to China to work in government. Basically, they're, I don't know, I'm paraphrasing here, recruiting spies. And that is a national security threat. People argue this is unconstitutional. Is it unconstitutional to place a restriction on accepting foreign students?
I think I think again, I'm not really a lawyer, but I think that any such concern would have to be much more narrowly targeted. First of all, Harvard is by no means the only university that has Chinese students. My own university, George Mason, we have lots of Chinese nationals who come in. Some of them have written dissertations under me. Some have remained in the U.S. Some have gone back to China. I don't think any of them were spies. And so obviously national security is a valid concern for the federal government to take cognizance of, but it should do so in a more sober, targeted way. Just saying, okay, we're going to target Harvard because it accepts lots of Chinese students, and some of them might be spies, who knows? I think if you're going to do that, surely our national security apparatus is sufficient enough to be able to look at individual students to determine if they do or don't pose a national security threat, rather than just this blanket, oh, we don't want Harvard accepting as many or educating as many Chinese nationals as it has been doing. That seems to me to be a pretext, the national security issue, to be a pretext for the Trump administration to basically carry out what looks like a vendetta against an institution that it doesn't like.
Well, good. Thank you for your thoughts, Professor. I appreciate your insights. Where can we follow you and your work in the meantime? I mentioned your new book. Anywhere else?
Thank you. Well, so I am not on Twitter or X, never have been, but I do have a blog, Cafe Hayek, named after the Nobel Prize winning economist Friedrich Hayek. It's just CAFEHAYEK.com. And I post there daily. It's just me, and it's only me. No guest or ghost posts, but that's where people can find me, cafehayek.com.
If you could have dinner with Hayek tonight, what would you say to him? What would you ask him?
Oh my gosh. Presuming he knows
what would you catch him up on in terms of world affairs?
I would explain, Hayek was a great liberal in the classic sense of the term. And in 1947, he helped found the Mont Pelerin Society, which is an organization of liberal scholars. They didn't agree on everything, but they certainly agreed that the global economy should be kept open because when the global economy closes, The greatest risk is not so much that our living standards decline. The great risk is that hot shooting wars break out. We have a long history of this. So I would catch Hayek up on what has been happening. He died in 1992. What has been happening since he died 33 years ago? At first it was okay, but really in the last 10 years, economic nationalism has been on the rise. And my guess is he and I would agree greatly on the undesirability, the danger of this rise of economic nationalism.
Well, thank you, Don. Appreciate it. We'll have you on again next time. Make sure to follow Professor Boudreaux in the comments section with a description down below. We'll put a link to his blog. Speak again soon. Take care.
Thank you. Appreciate it.
Thank you for watching. Don't forget to like and subscribe.